Hello, everyone. I'm Julia di Sosa-Rocha, associate broker with eXp Realty, your trusted real estate advisor here in beautiful Atlanta metropolitan area. And today, I am excited to dive into the topic that's becoming increasingly relative for many of my clients, especially those in retirement or thinking about downsizing, and that is reverse mortgage to purchase, also known as home equity conversion mortgage for purchase. Now, this is not your traditional mortgage. This is exactly why I want to bring someone whom I trust and whom I've been working closely for years, our experienced mortgage advisor, Dave Williford. And not only is Dave helping my buyers and seller clients navigate this process right now, but he also has been instrumental in educating our team and our clients about how this program works and who can truly benefit. Here is why this matters. The market is changing. Buyers over 62 years old are looking for smart, secure ways to purchase their new home, often without trying up all their cash or committing to monthly mortgage payments. Maybe they are selling a larger family home, and like one of my clients, Mary, who is 72 years old and just sold her 500,000 home. She's buying a smaller home and wants to be closer to her family and decided to go with reverse mortgage to purchase, and is doing it without no monthly mortgage payments. Yes, you heard it right. This program can open up so many possibilities where you're a buyer looking for comfort or freedom in retirement, or a seller wondering how this could help or a loved one make a smart home. So today I've invited Dave to walk us through exactly how this loan works, who is the best suited client for it, and how the process actually looks like, and how you, as the real estate buyer or even a fellow agent, can take advantage of this underused but really powerful mortgage tool. Dave, thank you for joining me today, and let's start with the basics. What exactly is the reverse mortgage for purchase, and how does it benefit? What exactly the reverse mortgage for purchase is, and how is it different from a traditional mortgage?
Okay. Well, a lot of people don't know about what a reverse mortgage is, and you really need to know what the traditional reverse mortgage is to understand what a reverse for purchase is. So traditional is going to be a refi, someone who's got a lot of equity in their home. Let's say they're old, they're 65 years old, 70 years old, they've been in their house for a long time, they got it paid off or nearly paid off, so there's a lot of equity there. But they want more flexibility in their retirement years. So, because let's face it, prices going up, Social Security and retirement sometimes isn't, really making things all that comfortable with prices going up. So they get the reverse mortgage and take advantage of the equity they've got in their home. Let's say you've got a $500,000 home, you could probably get the reverse for 250 or so, and that's just money that they lend you that you don't have to pay back until you sell the house, refinance, or you pass away. So like in my case, I'm planning on getting one of these myself. My home's worth about 300,000. I'll probably take a $150,000 line of credit on that. There's no payments on it. I can just spend it as I want. And it'll make my retirement, my older years a little bit easier by my not having a mortgage payment and having all that cash available. And so I don't really have any heirs, so that with me, I won't refinance, I won't sell, but when I pass away, my heirs will take the home, they will sell it, that'll pay off the mortgage, and then whatever's left over, then they keep. So that's a reverse for refinance. But let's say I wanted to downsize,
Mm-hmm.
like your customer you were just referring to. I've got a
Mm-hmm.
$500,000 house that I want to sell and downsize or get closer to my family or both. I want a smaller house with less upkeep and I want to be close to my family. So I sell that house, I pocket my $500,000. Now, I want to get a cheaper house, but I don't want to use up all my money. So let's say I find a $400,000 house near my family. Um, I could just pay the $4,000 in cash and walk right into it.
Mm-hmm.
I don't want to give up all that money. I want to make sure I've got plenty of money for my retirement. So
Yeah.
maybe I'll put $200,000 down and get the reverse mortgage for another 200,000. That's my 400,000 for my new house. But I only used up part of my money. I've still got $300,000 left over, and the reverse mortgage doesn't have payments, so I'm not paying anything out. It's paid off when I pass away. So
Mm-hmm.
it's a good way for me to keep a lot of money on hand and make my life more comfortable. I can do the things I want to do. If I want to take a vacation, if I want to, buy a new car, if I want to help out my family with some things, I've got the cash to do that. So my life is a lot better in my last years than it would be because I didn't have to spend all that money. It gives me plenty of flexibility.
Mm-hmm.
That's the basic idea, is to hold on to your cash, instead of having to use it all to buy a house.
Okay, got it. Um, Sounds great. Sounds like a very good program to dig into and know what it is about. Oh, but what happens if the home actually loses value?
Okay. On a reverse mortgage, you'll never owe more than the home is worth. So let's say I do what I'm talking about. I get that $400,000 home. I got a $200,000 reverse mortgage on it, but the
Mm-hmm.
market just tanks for some reason, and all of a sudden my house is only worth 175, but I owe
Yes.
200 or better on the reverse mortgage. Uh, the way it works is I will never have to pay anything over what the home appraises for. So let's say I pass away, my brother goes to sell the house.
Mm-hmm.
He knows I owe 200, but the house is only going to sell for 175. This
Yes.
is an FHA mortgage, and what FHA does is they insure mortgages to make sure that the lender doesn't get left holding the bag if something like this does happen. So when this does happen, then my brother will sell the house for 175. The lender will take the 175, and then they'll put in a claim to FHA for the 25 that they can't get. FHA will pay the lender, so the lender doesn't lose any money, and that makes the lender feel a lot better when they make these loans, and that's why they're so easy to get. There's really not a lot of requirements on a reverse mortgage. Your credit score doesn't really matter, as long as you made your payments on time for the last year or two. Score is not an issue, and you don't have your traditional debt to income ratios like you do on a forward mortgage.
Mm-hmm.
There is a net disposable
So
requirement.
sorry, sorry for interrupting. The home has to actually be FHA eligible. It has to meet the FHA guidelines, correct?
Now,
No?
there are some companies that are doing conventional reverse mortgages, but they don't have nearly the terms that you get on an FHA loan, and they don't have the protection that you have on an FHA loan.
I see.
So I don't really get involved with those myself. But yeah, since it is an FHA program, the home will have to be up to HUD standards, and there will be an appraisal that it will have to pass. So
Mhm.
are things wrong with the property, then that could possibly be an issue if they
Mhm.
are if there are such things that HUD would have a problem.
Mhm. Got it. Got it. So, and what type of buyers are ideal for this program?
Anyone over 62, and the way it
Uh-huh.
works, the older you are, the more you can get. So someone at 62 may only be able to get like 35% of the property value on that reverse mortgage. Someone 72 can get 45, someone 80 can get 55. So the older you get, um, the better it works for you.
Okay. Uh, so we That's good. How does this age of the buyer impact the loan amount or eligibility? And so it's like,
Well, like I said, the way it's going to work is that, of course, the older you get, the closer you are to being to the age where you're going to pass away. So there's less time that this loan will be in place for, and so they're basing the loan based on your life expectancy, basically. So
Mhm.
if that is very close by, then they'll give you more money than if it's way in the future, because the interest accrues on this as you're living. So there's no payments, but there is interest that's being charged, but they add that to the balance of the loan. And and when, of course, when you pay that off, you're going to pay all that interest plus the principal that you got originally.
Okay. Got it. So how does the process actually works if the client is 62 or above? So what are the steps? Is it like any kind of counseling, or they just need to submit the loan application with the mortgage company? What are the steps?
You'll want to talk to a mortgage professional like myself and let me use
Mhm.
our calculators that we have to kind of run just some scenarios for you in the beginning to see if it looks like it's going to work. And if it does, and you're ready to proceed, the first thing you're going to do is do your counseling. There are third-party counselors, they're FHA trained, that you will have to go counseling with because we want you to understand how all this works before you get too deep into it. So that's the first thing you'll do is get a professional like myself to give you a list of counselors that you can pick from to get your counseling done. And
Mhm.
then once you've got your counseling done, you'll get your pre-approval done, then you'll go find your home.
And the current home, does it have to be sold before buying a new one?
Uh, there is kind of a tricky little thing there with FHA because FHA, it's for owner occupied only. So you can only have one FHA loan at a time.
Mm-hmm.
You will have to, what a lot of people do is they buy and sell at the same time, or they sell and then later on they buy. In
Mm-hmm.
fact, you will have to probably wait uh, 3 to 4 days if you've got a current FHA loan. You would have to sell that home, pay off it, and we would have to get proof that FHA loan has been paid off. Once we've got proof of that the check has been sent and has been received by the lender and the FHA loan has been paid off, then we can make you a new FHA loan.
Got it. So it has to be some days in between. It cannot be like
Yeah, you would really want to,
it's traditional.
yeah, if you're selling a home with an FHA loan on it to buy your new home,
Mhm.
then you really want to put some kind of provision in your contract where you get to have that 3 or 4 days to wait for for the funds from the closing to pay that FHA loan off. Because again, you can't have, even for 5 minutes, you can't have two FHA loans. So
Mhm.
it has to be paid off and we have to get proof back that it's been satisfied. Then we can close on your new loan.
Got it. Got it. Okay. So, and what are the main benefits of using a reverse mortgage to buy a home versus just a traditional type of mortgage or a cash purchase?
Oh, the best thing is no payments. I can tell you from experience, not having a house payment is a great thing. Frees up a lot
Mhm.
of cash on a monthly basis. Plus, you instead of having to pay cash for your home, um, you can get money and you hold on to your money. Or another thing, let's say you got the $250,000, but the homes you want are 400,000.
Mhm.
But you're 65, 70 years old. You can get the reverse mortgage and basically buy a bigger house than you would be able to afford because 250 is going to buy you a 250 home. But if you can get another 150 or 200 from FHA, now you can buy a $450,000 home or $400,000 home. You
Mhm.
get more home for your money um, that way.
Got it. Got it. So, please walk me through the steps. Is what the buyer needs to take to close on the reverse mortgage? What are the steps actually? How the process would look like?
Well, first you consult with someone like myself. I'll
Mhm.
get my calculator out. We'll put some numbers in. and run some scenarios to make sure what you're thinking about doing or what you want to do is going to be something that's going to work. And assuming it's going to work, then like I said, the next thing we'll do is get your counseling out of the way because we want you to understand um, exactly how everything works on a reverse mortgage. And FHA has set things up where they have third parties who they're not lenders. All they do is counseling, so that they will give you an unbiased rundown of how it all works and answer any questions you have, so you know uh, what you're getting into before you go.
Mm-hmm.
At that point, then, if that goes well, you're still interested in moving forward, then we're going to get an application on you. We're going to get a credit report. We're going to get some income documentation. We're going to verify all the other numbers, like we're going to get the appraisal, we're going to get the title work, we're going to get the insurance, we're going to get the tax information on the home, and put all that together. And then it'll go to an underwriter. And really, the only requirement is to make sure that your income is enough to cover the net disposable income requirement.
Mm-hmm.
So like a VA loan, VA has not only a debt to income ratio, which we don't use on FHA loans. It doesn't
Mm-hmm.
matter how much debt you've got, as opposed to your income necessarily. But what we're looking to see is you've got a certain amount left over after you pay your bills every month. Like, for instance, for one person, that's going to be like $382 a month. So as long as after you've paid all your bills are on your credit report, your taxes and your insurance, as long as you've got 380 something dollars left over, then your income's out of the way. You're qualified there. Then your appraisal is going to come in. As long as it comes in okay, you're good there. Title work's going to come in. And as long as you're okay there, they're going to let you close the loan. It's really a very easy loan to qualify for, because
Mm-hmm.
the net disposable requirement is a lot easier to meet than the debt to income ratio requirements.
What if home doesn't appraise?
Well, that it would be basically the same thing as if you're going with a forward mortgage. You would have a couple of choices. One, you could pay out of pocket cash the difference. Let's say you contract for $300,000 home, it comes in at 290. Well, you can bring in an extra 10,000 at closing to make up for that $10,000 shortfall. Or
Mm-hmm.
you can negotiate with your seller and they can lower the sales price. Or you can be halfway somewhere.
Yeah,
It's
so
up
it's
in the air how
pretty
you do it.
traditional type. Okay.
Right, but the loan's still going to be based off the appraised value or the sales price, whichever is lower. So if the appraisal comes in lower, that's what we're going to base the loan off of, not the sale.
And what costs are involved for the buyer at the time of closing for reverse mortgage?
Well, you're going to have your same traditional closing costs as you'd have on any loan, your title fees, your government fees, your recording fees. There are rarely lender fees. The biggest expense you're going to have is since it is an FHA loan, they have the upfront mortgage insurance that has to be paid. On a forward mortgage, it's 1.75% of the purchase price. On a forward mortgage, they're going to take that insurance premium and add it on to your loan amount and finance it for you, so you don't have to pay that upfront. It's just part of your monthly payment every month. But since there's no payments on a reverse mortgage, they collect that up front. So that's going to be your biggest expense going into it, is your upfront mortgage insurance.
Okay.
So basically, it adds 1.75% to your closing costs.
Okay, understood.
But you don't really see a lot of lender fees on these. There may be an admin fee or something, but mainly it's just your title fees, your appraisal fee, your closing fees, your government fees. And we're not doing an escrow, so we don't have to set up escrows, and that does reduce the amount that you have to bring into closing.
Is it any limit for the mortgage amount?
They are, well, not, I mean, there are, but they're pretty high. I mean, you could potentially get an FHA reverse mortgage on a home up to $1 million.
Okay.
So,
Okay.
put you up in the jumbo range, but most we just don't see that a lot, because most people who are getting these are, if they already own a home, they're downsizing. If they're not, then they may buy a more expensive home, and But, most people are, they're trying to go down in price and down in size usually,
Mm-hmm.
at the age that we're at when we get to these.
Mm-hmm. Okay. So how can I, as the real estate agent, can help buyers to navigate this through this process? Is it anything specifically that real estate agents should know that we can educate the agents about it?
Well, the main thing is going to be that they have to have a significant amount of cash or a significant amount of equity in their current home.
Mm-hmm.
This isn't
Okay.
something you can put 3.5% down on and make it work. You're going to need at least, I would say at least 50% equity. So if you run into a customer who's over 62 and they've got 50% equity in their current home, they're a really good candidate for it. Or if there's someone who comes to you and says, I want to pay cash for a home, and they're over 62, you may want to discuss the option of holding on to some of that cash with them. Don't spend $500,000 on a new home right now. Spend $250. Get a reverse for $250. You still won't have payments, but you'll have an extra $250 in your bank account that you can enjoy while you're still alive here.
Mm-hmm. Okay. Okay, understood. And how long the process actually takes from the beginning until the end? Is it about 30 days as traditional, or it takes a little less or longer?
It's usually less than 30 days. Because the underwriting process is not as strict. Like I said, all we have to worry about is that net disposable income. We're not going to worry about credit scores. So you could have a 550 score, and as long as you've made all your payments the last 2 years, we don't care. You're still going to get a good deal. It's not going to affect your rates. Not going to affect how much you get. Not going to affect any of that. But and even if you do have some late payments, there is a thing called a LESA, LESA, which basically is money that they're going to hold back. Well, so let's say you've got the potential for a $300,000 reverse mortgage, but you've had some late payments that are affecting your qualifications. Well, we can take a portion of that money, 50,000, 60,000, I don't know the exact amounts, but they can take a certain amount and hold it back in escrow for you. Let's say if you didn't pay your taxes on time the last couple of years in a row, then that would require, they wouldn't turn the loan down. They would just do a lease. Instead of giving you the full $300,000 that you could qualify for, they're going to hold some back to make sure that the taxes and insurance are paid if you don't pay them.
Got it. Okay, understood. Okay, I like it. I will definitely make sure to share.
It's really a really simple thing, but again, the main thing is it does require significant equity or cash down payment for this to work.
Got it. So I will make sure to send it to all my clients and share. And if anyone is interested and would like to learn more about it, so please reach out to us and we'll be happy to schedule a private consultation. And because I'm sure everyone's scenario is different, so we can look at each scenario separately. And make sure to subscribe to my channel, share, like, and stay tuned for the next videos. We'll make sure to record more and educate you about different kinds of financing options and what programs are available there. So you will hear from us more. Dave, thank you very much for joining me and explaining this unique program. I always pleasure working with you and seeing you.
Same here. I enjoy working with you.
Okay. Have a great rest of your day. Bye-bye.
Bye.